Hey everybody, welcome back. Well, a lot to go over in a short time to do it, so let's get into it. First and foremost, I use this to guide me, and I'll explain what it is. This is the NASDAQ divided by the S&P, and it tells us relative performance. You can see the date up here, and this is a 55. Now I'm going to take these lines off for a second, and we flipped. And this is really important because a lot of things flipped around the same time today. So if you look at this level right here, it's the 19th. Now, you guys will know this level as a CTA sell level. We'll get into that in a second. But if you're looking at this level up here, we're far from that, right? But what we're starting to see is we have this W, and this is the 55 SMA. NASDAQ relative performance to the S&P. Since we had the CPI month over month down, when we had that negative number, we have flipped. We broke it. We've been unable to rally over it. This is the first close that you've had over the 55, relatively speaking, since July 16th. That's a big deal. It's a big deal to me. And I'll give you a great example of how I use this. I use it as a guide. And it usually tells me when we're setting up for a larger move in the markets, specifically in tech. Because if I'm not outperforming, if tech is not outperforming, people are not going to buy it. They're just going to buy the SPY. Why would you buy something that's not outperforming and take more risk? It just doesn't make any sense. You wouldn't do that. So I use this as a guide. Sometimes it'll chop me up a little bit, but usually it's fairly good. And I've been laying off the swing trades on tech. Yeah, I've done a couple, but I've really been laying off the swing trades on tech. I started picking them back up a little bit in here, but there's other fish to fry, and we're going to go through that in a second here. Do the kids still say that, fish to fry? And you will get chopped up. You'll have your moments, but if it flips back, you're fine. But it also helps me with determined trends. So if you look back here, January 23rd, and you went and took a look at the S&P here around that same time at January and see what you're doing in here, right? And then go take a look at the Qs during the same time frame and which outperformed. And when did that outperformance finally flip? And if you just take a look at what I'm showing you, you'll see where the SPY is. You can see where the Qs are. And then you would just go and take a look at what I'm showing with the Qs relative to SPY performance. And you can see when we finally flip that area. And of course, you're going to get false positives, but it's a really nice guide to just kind of say, hey, this is what's going on. And I think that's important. We've had two major events today that no one was expecting. Two major events, in my opinion. But here are the Qs, and we just see this. I'm just going to leave the 55 in. And you can see that the 55 has been above before the relative performance, but I really want that relative performance. That's when it tells me like, hey, we're going to start seeing inflows into tech. So I monitor that pretty closely because you're not going to really see inflows into tech if S&P is going to outperform the NASDAQ. There's just no reason. So if we take a look at how this is going, it's pretty much a textbook W and you flipped and this is your first day over. If you've been following me for some time, we've been talking about this in regards to the NQ. Specifically, we've been talking about the CTA level, and we're just going to walk through it again just so people can understand what I'm talking about. As we all know, we had our real key level right here on the 11th. And the 11th was CPI month over month, and that was negative. It was right here, and that was really important to us. Now, if you are a fan of this channel, if not, welcome, and you may want to subscribe. What we go over here is extremely timely, and we try to cover the macro, which is what I'm drawing right now. This is the macro, the fundamental, and the technical, and then I show you how it is all created. I found after trading for 25 years that this works the best. So here we are, and you should do what works the best for you, but I find this works the best for me. Understanding why the moves are happening so that if I see some kind of contra trade, you can act on. So right here is that month over month negative. We can see what happened here. This is where Japan starts kind of falling apart a little bit. And then, of course, this is like when they throw in the towel, and that was the bottom. And now we're back over it. But we had this band of resistance, and there's no really other way to say it. And we hit what's called a CTA sell zones. And you'll see it right in here. You really can't miss it. And we zoom in on this, you'll see what this was doing was every time we got in here, CTAs were selling. If you don't know what a CTA is, you can just go look that up. I would suggest that you become familiar with it, considering how technical the market's trading, and how technical the market trades, period. But if we look in here, every time I got in, it was just sheer bonk, Matumbo over and over again. Couldn't get through it, pops over, and this is what we're dealing with. And I think that this is really important because you are over some key levels here. And you did get over them, but you kind of came right back into it. Now, this is a little high, but the CTA level really is that high. It started on the 18th or 19th. And from there, this is our band. Now, if we look at our band on the Qs this is where it gets kind of interesting from my perspective, because the Qs don't trade the same way, right? You have different levels. We'll just drop that there so you can see it. But on the Qs, you can see how we're clearly over that level. But, the NQ trades more than the Qs do. So obviously you're going to get different readings sometime. But you did test this level today, and I think that's really important. You did come back here and test it, and you did hold it. And you tested it not once, but twice. And if you drill into this, it was textbook. It really was. Like, here's your gap fill, test, tries to rally, fails, retest, and then lifts. And there's nothing really to do there except you either put the trade on or you don't. And you can see how we're acting from there. But we had some real catalysts today, and we should probably describe those before we go any further. Now, there were two core pieces of information today that I don't think people were expecting. Obviously, we have the Micron news and we have Costco after hours. But Saudi Arabia ready to abandon its $100 crude oil target. So Saudi Arabia and the U.S. were having this battle going on with the SPR. And what we're seeing happen is we were seeing them try to keep prices high and then force the U.S. essentially to buy at a higher price. And then we just had Biden basically saying we're not going to do that, or the administration saying we're not going to do that. Eventually what happened here is that Saudi Arabia stopped producing, and we're going to see that in a second. And they started slowing down production. And what that did was that led to their hope that we were going to get up to this $100 crude. It did not happen, obviously. And we can see that in the production levels. Now, this is from the Financial Times, and I think that this, again, is really important for people to get the concept of as well. A couple of reasons. But if you look up here at 21, 22, you can see those peaks. And what we're showing here is Brent crude billions. OPEC production cuts have failed to push oil higher. And what are you really seeing here? Right? And you're just seeing these tops over and over again, and we're just starting to roll, right? So we can all see this, and we're breaking down. So in other words, OPEC is coming out and saying, we're cutting, and this is what's happened. And so while they're cutting, and this is dropping, that's not ideal. So the fix for them is to say, okay, we're watching all these other countries produce, and they don't care. So we have to produce now. And that's exactly what they're doing. So they're going from a model where they were concerned about rising prices and they wanted rising prices to saying, okay, if you guys are going to play the game of just producing and we're still going to see the market drop, then we're going to produce. And what they're going to do is they're going to force the price of oil down. They just are. And what this is going to do is it's going to make the margins less for other people. No one can really compete with Saudi Arabia. So they're going to just drive the prices down. This is actually even bad for Russia. So again, you just know, down 3% on the day today, but bad for Russia because if Russia needs money and all of a sudden pricing is coming down, I'm trying to figure out why the timing, why now? It's interesting timing with the election coming up, Ukraine and the battle that's going on there and putting pressure on Russia. But why today? Why when China did what they did? I find the timing, but we'll figure it out later, I guess. But this is going to put pressure. That pressure is not going to go away. So what does that mean? It means Russia's going to have pressure as well. But it also means that we get cheaper oil and cheaper gas. And what this does is this actually will drive up GDP, which is good. And not only will drive up our GDP, but it'll drive up the global GDP. Remember, U.S. GDP, 2/3 of all profits are linked to oil one way or another. They just are, whether it's transportation, buildings, goods, whatever it is, you need oil. And so a lot of it's heavily relied on it. So I think this is very interesting, the timing, but there's definitely more to see here. Now, Supermicro, the timing is crazy to me because Supermicro came out and said, and the stock's at about 17%, but Supermicro came out and said, we don't see any material changes. And now all of a sudden the DOJ is investigating them and the stock absolutely imploded on the stock just dropped and cratered. And we're going to get to that in a second, but this is not ideal. It's also not ideal for NVIDIA shareholders. It's not ideal for semiconductors because it has this cloud over it. Like, okay, is there a real issue here? Are you guys really cooking the books? Like, what is going on? And if so, are you inflating demand that's not there? There's a whole litany of issues that people can surmise from this, or I should say speculate on. And it's going to be a cloud one way or another. I think it is going to be some kind of cloud. And I'm speaking as somebody that is long NVIDIA, likes NVIDIA a lot, but he's a very close relationship. Jensen has a very close relationship with this company, keynote speaker. And this has got to clear itself out. And these department, when they get in there, this does take a while. It's not like it's over in a couple days. Now, I want to point this piece of data out, and it came out exactly as I was recording this. So I wanted to just walk everybody through because it's very important. So tankers. What Saudi Arabia does here is when they have tankers, they need tankers obviously for what? For their oil. And what they do is they go out there and grab all the tankers and they basically have them circle the globe, right? And while they're out there and they're circling the globe over and over and over again, they go and drop it, but it does a couple things. The first thing it does is it drives the price of a tanker up for all other neighboring places, right? All other neighboring countries that are producing, all of a sudden they're going to pay more for the tanker that they're going to get because why? Because their tanker is now going to be more in demand, supply and demand. It's not rocket science. But what Saudi Arabia does is it just has them circle the globe over and over and over again, whether or not it even delivers if it wants to tie it up. Well, this throws in a lot of money to the tanker companies. And you can even see today, you saw this guy come out, who's the president, come out and buy, and this hit the tape while I was filming this, so I thought it was worth mentioning. The president's out there buying $1.5 million worth of contracts on his own stock in the open market. Worth noting, you might want to take a look at this. And then, of course, if we could just take a look here, durable goods coming in, a little bit better than expected. The GDP miraculously coming in exactly on the button. Durable goods, ex-transports month over month was actually up. If you look at GDP index quarter over quarter, coming in right on the button, another miracle. Initial jobless claims coming down as expected, but we thought that might be light. We've seen that. Core PCE prices quarter over quarter coming in exactly on the dot. Corporate profits actually are doubling versus consensus, which is kind of crazy if you think about it, and people think we're in a recession. You have 3% GDP quarter over quarter, and corporate profits are doubling, but for some reason people think that we're in some kind of recession. GDP sales quarter was 1.9 versus 2.2, and then prices quarter over quarter. I always look at PCE, which is coming out tomorrow, and another Christmas miracle right in line. Crazy how accurate these numbers are today. Now, the bond auction, you did see a high on the 10-year today, and this is a really weird auction. 7-year note. But 377, 366, there was 44 billion of this today, which is on the high end. A lot of people don't know that, and that's okay. You don't have to know everything. But I like to point some things out. This was a big auction, and it's 7 years, and that's really weird, isn't it? But the 4-week was in line. 8-week was kind of in line. You're off by a couple hundredths of a basis point. And look at where the mortgage rates are. And then Kashkari speaks, because why not? And Yellen spoke. And that was actually pretty muted. She did take some jabs, at the former president and his administration, but I'm not really sure. Well, it's election season, maybe that's why. But there was nothing really here that was out of line or really weird. Sometimes like last year, she really stepped in it. This year, not so much. So, and then these guys seem to have tempered. Kashkari, they've all seemed to have tempered, and they seem to be in lockstep, probably worried about their jobs coming in November. 7-year note, though, went off great. Let's take a look at the market there for a second. So if we look at the open yield in the market, what we can see right here is that bottoming. And that bottoming took place right around the Fed meeting, didn't it? And then ever since then, what did we see? We just yield after yield just rallying up. You are getting to a level where it seems to be hitting some kind of base. Like right in here, you can see some issues in that area. That looks like that 378, probably 3 3/4 is probably more accurate where you're running into issues somewhere around there. But if we drop this down into a 5 and then we just blow this up, you can just see bonk, bonk, trying to lift and it can't. And then if we just drill this into a 1, what we'll do is we'll just look exactly what happened on these bond auctions. And you can see right here, 1030, down 11, and then you're coming straight across. 11:30 non-event, 1 o'clock right in here. As soon as that 7-year was done and they saw how well that auction went, it was just straight buying of the 10-year. And then if you kind of equate that over and start looking at things like the SPY during the same period of time, another miracle, right? You look at that 1 o'clock, everybody's panicking, and then they just sell down, and then we just rip from 1 o'clock on. And everything really did the same exact thing, didn't it? Right after 1 o'clock, you had this like sell down, and then we just ripped. Once they kind of settled in with the bond auction, you had that double bottom there. And I think that's important. I think it's really important to understand what happened today, especially if you look at the Qs. I mean, really all you did here was just rally to this gap fill. Actually, that's a bar after hours. But if you look right here, you can just say it. Actually, if we do it this way, it's even cleaner. Just do pre and post. Zoom out for a second, and then just drop the line right there. You can't miss it that way, can you? So all you did was really gap fill. It was beautiful. It was absolutely beautiful if you were interested in playing the gap fills. There's your test. You rallied, retest. Overlay this with the most simplistic of things, too. Just watch it with the VWAP. Like, it just doesn't get more obvious. But on this retest, it was like a really nice area if you were looking for it, because then you're done both bond auctions, everyone's done speaking, and then you have those more The more gradual moves, but the more specific after 12 o'clock, 1 o'clock, because retail usually goes goofy in the morning, and here they are again. And then they'll say the market's going to crash, but they just don't realize that institutions sold to them and then bought at the end of the day, which tends to be what they've been doing now for a couple years, and institutions are going to keep doing it until retail figures it out, but whatever. So I do think that this is important to understand. And if you look at the market right here and clean this up, and you can just kind of see how we're sitting right here. You could look at that and say, oh, we're down today. Well, okay, we're down today. So what? You're going into PCE. People locked in their gains. All the data that came out was very, very good. And there was go here and take a look at some of these things along the lines like Micron. Micron absolutely crushed. We had calls on this. We did exceptionally well with it. Some people had stock. And you can see how you're acting right here, right with that zero line going straight across here. I'll just drop it for you so you can see it. I don't know to see any reason why you're going to break that. 112 was a big level today too, and we couldn't seem to hold that. I'm not really sure why the issue at the 112, but it was an issue today, and you can see it up here. Even the pre-market, you always mark this stuff off. If you're a trader, you mark off that 4 o'clock. You want to know what's going on in Asia, and you always want to watch these pre-market levels, like the highs. You see that what they did here at 9:30, but always watch that pre-market, because if you can't get over that, that's pretty much it. And this was pretty textbook stuff. Up, rallies, and then you go from there. I sold a bunch of the right off the open, and then, it was just pretty clear what was going to happen, and you can see it from there. Once you see stuff like this, and again, you do the simplest of things where you just have like a barometer, like, just watch your VWAP. It got really clear. Here you are. And then that was it. Broke that, and then you never looked back all day, tried to fight it later in the day. This was a really good call. This was really good earnings. Very solid report. Significantly better than everyone expected. And that's why you're seeing things along the lines of the SOX doing what it's doing. And people are saying, well, it's not up on the day. It doesn't matter. You're starting to get above that 55 again. I use a 12, a 22, and a 55. So we have this as a driver, which is really nice, this being the semiconductor index again. And I think that's important. You're also seeing that shift into uranium continue as it lifts higher. And of course, we're going to see the XLB names continue to lift and break out, which is exactly what they're doing. You can always look at Lin, for example, which is the highest percentage of all the holdings in XLB. But guys want to play the copper, and I don't blame them. Copper names are just absolute fire, and there's a couple reasons for that. The biggest reason really is just going to be China. And what you're seeing here, candidly, the easiest way for me to explain this is they did some stimulus. People didn't understand it. That was this day. And they sold down the next day. And then when they came out and clarified what they actually did, the market exploded. This volume, if you go and take a look here on the weekly on FXI, you shouldn't sleep on this. So if this volume's right here, I know Tepper was on CNBC touting it today. He has very different time frames than the majority of us. He can stay in stuff for years. When you start seeing 20 all-time high volume, 20 years out on the weekly, and you're challenged only by here, March 22nd, and all you're challenged is by here, and you're above these weekly moving averages, you want to pay attention to this. I am not a huge fan at all of this kind of the exchange over there. I'll just leave it. I find it very difficult because of the time zone, the liquidity issues, the way that the regulatory bodies, the way things work. But you start getting over this 200-day, and you're right there. You're going to see another wave, an influx of buyers coming in, and there's a litany of names that I can go through this weekend. I would just look for the cheapest names, guys. That's all I would do. I would focus on what's cheap, what can I buy, what's cheap, and go from there. But these are the names that I would focus on. Just look for things that, not just the usual suspects, but start looking at things that are trading at cheap price-to-cash ratios. And I have a list of them, but I don't want to go through them today. We'll go through them this weekend because there's other things that I think we need to deal with. But let's just look at the overbought, oversold conditions for 1 second after we focus on Costco. And I think that this is important because I do think there's some things out there that could kind of hurt us. For example, Costco missed revenues. So everyone that loves Costco, looking at these long lines and like cheering for, when they see them, you missed. You missed your revs. Your earnings beat, but this number here missed. So your revenue, and you can't miss revenue. So especially when you're up here with this kind of PE and growth rate. So we have to see the conference call at the time of this. It's not being, I'm not on it. I haven't heard it yet. But I would pay attention to this tomorrow. Watch what happens with the PCE. I do want to go through a couple key things. Let me see if I have it up here already. We can do it this way, I guess. Here. And let's just go through these levels where you can see stocks above the 5-day, stocks above the 20, both 50, 20, and the 200, and you can see where you're at. I do see this. It is at the high end. This is usually where you'll start to come down. The 5 will drop first, then the 20, and then we'll go from there. You also have some other things out there that do look really like they're up there. Let's go to a 4-hour, and you're at the high end on the 4-hour of the RSI. People say, I don't use RSI. That's okay. There's a lot of things that they use that I don't use. So, you should use what you're comfortable with. I mean, if I see something like this and it turns at the 70 over and over again and it tends to mark a high, I think I'd just be remiss if I don't use that. So if you shrunk this down, and it doesn't matter the time frame, you can see how many times you're up here and down here, right? I mean, you guys, but if you're up here over and over again, and then all of a sudden it tends to lead to some kind of top, and then you do something as simplistic as just go, okay, well, I don't want to look at RSI and go, okay, well, if you were to use this on these levels, and then you just said to yourself, I don't want to use RSI, and then you just did something like this and go, okay, well, I don't know if there's a way to tell when we're going to peak at highs or not, but if there was, I sure like to know. You might want to start using RSI on a 4-hour chart when it's overbought, because this is pretty much just showing you pretty much the last 10 peaks before you went sideways or down. So maybe something to think about. Now, you can always drop it to the hourly and then go see there and get a better sense of it, but you're going to have that more broad-based sweep than you have right here. Can you just stay here and just grind? Yeah, you can. But eventually it comes home to roost, and I would just want to keep my finger on the trigger there. What else was of interest to me? I think that it would be helpful to see it this way too. Let me show it to you this way. I'm going to do the histogram, and we're going to do that on the hourly, and I'm going to clean this all off. So if we look here, I'm not oversold at all in here on the Qs. Now, if I drop this to the SPYs, for example, I'm not oversold here either. So what we're always looking for is, are we overbought or oversold on this? And we're neither. So then if I drop this to a 4-hour and you take a look at this, you can see that you're getting peaky. But really what you want to use this for is the flushes, because if you watch the red change colors to the pink, it will mark on 4 hours. It can mark a bottom. So again, just another little like tidbit. And I'll just do like the past 4 of changes, or just, hold on, Boomer. Let's click on that, and then we'll go here, and we'll just click when they change colors, and we'll see if there's anything to it. And then if you look at that, and then you changed right here as well, and then just kind of get rid of this for a second and say, okay, are they spots that we may have bottomed? No, yes, 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 kind of, yes, yes. Okay. Do you think there's something to that? Yeah. So I don't really have an oversold there. Now, if I went and took a look at this and looked at the Qs, and we did the same thing, you can all see that. But do I have something here I have to worry about? Do I worry about this negative divergence? Not overly. There's other things that I would worry about. So I don't see us as really any place where we would commit a large amount of capital. Where I think you have to do is I think you have to look at the rotation. And I've given you some ideas on where that may be going today. And we'll get into greater details on that Saturday. That is it.